It's time for Tycoons of Small Biz, spotlighting the true backbone of the American economy, the true tycoons of business in America, the owners, founders, and CEOs of small businesses. The show's hosts, Austin Peterson and Landon Nance, are registered representatives of Lincoln Financial Advisors Corporation, a broker-dealer, member SIPC, and registered investment advisor. The views expressed by your hosts, Austin and Landon, are not necessarily the views of Lincoln Financial Advisors. Backbone Planning Partners is a marketing name for registered representatives of Lincoln Financial Advisors. Now let's lean in as Austin and Landon connect with this week's Tycoons.
Good afternoon, Tycoons, and welcome to today's episode of Tycoons of Small Biz. I am your host here, as always, Austin Peterson. Throwing you a bit of a curveball today. I'm coming to you live from Landon's office in Las Vegas, Nevada, and Landon's not even on the show. So we're throwing a bit of a curveball, but we're excited to have on the show today Dan Beck, co-founder and CEO of 401go. Before we jump in and talk to Dan and have Dan tell us his entire life story, I'm just going to take a quick second and explain what we do here at Tycoons of Small Biz. So if this is the first time that you're listening to our podcast, we are a small business radio program or podcast by small business owners for small business owners. And really the reason we do this is that Landon and I truly believe that the small business owner is the backbone of the American economy. And we feel it's important that we give them an opportunity to tell their story and highlight them as best we can. Landon and I are both small business owners, but we're also members of families that are multi-generational small business owners. And we truly believe in the small business owner and their community. So with that, we started this program in May of 2020. We're coming up on our 100th episode, and we're excited to have a true tycoon on the program today. Dan Beck, like I said, co-founder and CEO of 401go. Dan, welcome to the program.
Thank you. I'm glad to be here. And I hope that the 401k talk didn't scare Landon away. So I know that might bore a lot of people, but you guys you're financial advisors. So you're used to this stuff, right?
Yeah, exactly. We're definitely investment professionals. And if any of the guests that we've had on the show, like I said, we're coming up on our 100th episode. If any of them understand all of the disclosures that are read before we start the program, it's you.
Yes. Yeah. Unfortunately, I don't have to add one. I'm not licensed with any, securities licenses. So, but it probably is best if you know me to not take financial advice from me. So I'm a little, maybe a little bit much of a risk taker. I think that's why I make a good entrepreneur in many ways.
Oh yeah, no, absolutely. It definitely takes that to be an entrepreneur, and I know that you've got a partner, and maybe he's the one who kind of keeps you grounded and puts the processes in place, et cetera. So we'll definitely open that up and explore that as we jump through the program. But before we kind of get into the nuts and bolts of 401go and what it is that you guys do, we typically have our guests tell us a little bit about themselves personally. So tell us, where you grew up, what you studied in school. Do you have a family? Do you have any kids? Tell us what you'd like us to know about you personally.
Yeah, let's start with the family, because I think that's, for me, probably my biggest pride and joy. I've got 5 kids, so that is an endeavor. Each one is an endeavor in and of itself. Anybody that's a parent, I'm sure, can agree. And a very beautiful, loving, supportive wife that has enabled me to pursue my dream every few years when it changes. So that's kind of where I am today. I grew up in Utah. I'm still here in Utah. I love it. I love the outdoors. I love it's very family friendly. It's a great environment. So yeah, I live here. I've been a serial entrepreneur really since my early 20s. Kind of my first career, if you will, was in TV productions. So I always dreamed of being a TV producer. I ultimately was able to do that kind of in my 20s. But at the same time, I went to school and I've been to a number of different schools, probably half of them in Utah. By the time I finally graduated, like 10 years later, I had enough credits. I probably could have had a master's degree. The problem is some of them were engineering, some of them were in broadcast journalism, some of them were, it was all over the board. And so ultimately I just went to an enrollment counselor at the University of Utah and said, "Hey, this is what I've got. What do you recommend?" And she's like, "Well, you'll probably get through the business department pretty quick because a lot of these, would fit well there." So I got a degree in business information systems, and it was more, during the time I'd already launched a couple businesses and had sold some. And so it was more just something I love learning. And I think the college environment is a great place for that, and the structure and everything else. But really, I think that's what defines me as a person, is that curiosity that pushes me to try new things, to start businesses, to be a TV producer. I just love creating things and putting them out into the world and watching them grow. I've had failures too. I tried a food truck. I'm not very good at food trucks. That lasted for a couple seasons or whatever. It was a lot of fun, but I'm not cut out for that. So I think that's just the fun part of being an entrepreneur, is being able to dream and to pursue those dreams.
Yeah, I agree with you 100%. There are a couple of things, in your personal background that stuck out to me that are either similar in my background or that have a connection. So it also took me 10 years to get my 4-year degree.
Yeah.
And a lot of that has to do with the same reasons as you. I started a couple of businesses while I was in college, and I had a family. I started, relatively young. I got married just before I turned 22 years old. And we had our first child before I turned 24. And by the time we had that child, I was neck deep into this financial planning business and trying to build it from the ground up, and, just barely kind of making ends meet, and, sometimes living off of credit cards to be able to make ends meet and buy diapers and, all those kinds of things. And so, I certainly understand that. And then the other side of things that I would mention is, you mentioned broadcast journalism. My son is actually a sports journalism major at Arizona State right now. And, we're big sports nuts, and he likes the journalism side of things as well. So that's a pretty cool tie-in.
Yeah, no, I enjoy kind of the broadcast environment, and there's a lot of creativity, and it's fast paced and everything else. But ultimately, it just wasn't for me. I prefer being on the kind of the other side of the lens, if you will, and being able to just have my hands involved in all aspects of production. But yeah, it's been a lot of fun. I feel like I've lived many lives already.
Yeah, no, I think obviously the whole setup you've got there with the studio, speaks to the fact that you like to be on that side of the mic. And I know you had a choice of podcasts. It was either Joe Rogan or us, and it's clear, why you would choose us.
100%. I love small business.
Well, good. Let's get into, what exactly 401go is, right? I mean, most people that are listening, of course, have heard of a 401k plan. You and I and Landon, of course, understand them better. Landon and I are investment advisors for a couple handfuls of 401k plans, for our clients. It's a fairly large part of what we do, but I don't know that people truly understand necessarily what a 401k plan is, how it came about, why it's here, why it's important. So, tell us what you want us to tell about, to introduce the 401k for those who may not be as familiar. But what about 401k drew you to, let's start this company called 401go?
Yeah. A little background on 401k is it's basically a reference to tax code. So that right there is exciting in and of itself. And and it gets quite complicated. It was something that has kind of certainly evolved. I don't want to say a loophole because it was there for a purpose, but nobody imagined that it would be what it is today. Ultimately, it's a way to save a significant amount of your compensation for retirement. And there's a lot of tax benefits that are associated with it. And so because of that, with all the different tax benefits, there's a lot of rules that go along with it to make sure that it's being utilized the way that the IRS and the Department of Labor intend for it to be utilized. So my first experience with a 401k, I didn't have a lot of financial education growing up. That was one of the first courses I took in college, and I've been kind of a finance nerd since then. I remember distinctly one day the advisor or the teacher bringing in some advisors to just talk to us about, what the role of an advisor is for an individual. And I remember They probably didn't want to meet with a bunch of college students, the advisors. I guarantee it's not like we have money to be saving. But they did say, here's probably the best advice I can give you right now to start saving for retirement. And it was that very day I went home and I found a way to set aside $20 a month towards retirement. And that was really my first experience with investing and everything else. And that's the way that I see the 401k. And I think that's what inspires us and gets me up every day, is that I view it as less of like some big corporate benefit and more as a pathway to get young, oftentimes lower paid employees saving for retirement. Our goal is to have every hardworking American ready for retirement. And the 401k is probably the best way to do that. So the first time I set it up was one of my first businesses. I was writing checks to Uncle Sam that were honestly bigger than distribution checks I was paying to myself. So I was reinvesting just about everything I possibly could back into the business. And while that was income, I was being taxed on it, but it wasn't take-home pay. So I remember talking to my CPA, and at the time I was maxing out an IRA, I was maxing out an HSA, and really the 401k was the next step. And so, to be perfectly clear, the very first time I tried to set something up, it was for me. It wasn't as much a benefit for my employees. I think I had maybe 4 employees at the time, and they didn't really have any interest in it. But because of how complex it was going to be time consuming, messy, expensive. And as a small business owner, I didn't need any more complexity or cost. And so I ultimately abandoned the idea. Several years later, I was involved in a handful of other businesses. Company had grown quite a bit. And kind of at that point, my focus was really, I was investing just about everything I possibly could into one business endeavor or another. And so I wasn't really using even an IRA at that point. But I still wanted to set up something for my team, just knowing that really the success that I enjoy is dependent on them and kind of that environment and having a positive culture. So the second time I tried to set it up, it was truly for the benefit of everyone within the organization. And I kind of found the same thing. It was still just as messy, still complicated, and still expensive. And so I abandoned it a second time, about 2 weeks into the process, and just determined, okay, well, I guess the only way I'm going to be able to offer that benefit is if I have an HR person. And a few years after that, I'd sold a few businesses to my brother, who is also a business partner. He's the grounded one. I'm the one with my head in the clouds. He's the one that keeps me grounded and makes sure things happen. We were kind of discussing our options and really decided to focus on 401ks and making them accessible for small businesses. About half of working Americans don't have access to a retirement plan. And that's oftentimes because they're working for a small business. And so we knew that if we wanted to kind of leverage the power of what a 401k could do in terms of inspiring somebody to get started on that road to retirement, the 401k was the best way to do it. And in order to do that, we had to close the accessibility gap for small businesses. So we built a tech platform. By we, I mean mostly my brother and a handful of engineers, that is a full stack 401k designed for small businesses. So we've really built something very transformational that hasn't happened in the retirement industry. And now we're in growth mode. This is the first time I've been involved in a company that's venture backed, and we've gone the VC route. That's how I got here today.
Yeah, no, I think it's a cool journey. So when exactly did you guys launch initially?
So we started researching it in 2017. We launched toward the end of 2018 and have since grown considerably. Last year, I want to say it was about 4x growth, and we've just been growing very rapidly. We have everything from a solopreneur, we have hundreds of those on the platform, upwards of employers with 500 or more employees. So there's been a lot of growth in the last year.
Yeah, it's interesting. So, obviously this is my industry. It's my bread and butter, so to speak. And I've been doing this for 22 years now. And, I think one of the biggest frustrations that guys like me have, and I'm even on, I would say, the older end of everybody that wants things to be more technology based than they have been in the past, right? But it drives me nuts because the financial industry as a whole. So it could be 401ks, it can be investment platforms, it can be life insurance, disability insurance, all that. The technology is pretty far behind a lot of the other stuff that's out there, right? If it's frustrating for a guy like me, Landon is about 7 years younger than me. And so it's got to be even more frustrating for him and guys that are in our industry younger than that. But on the business owner side, they just want something easy and able to be set up. You talked about it a couple of different times. You abandoned it yourself 2 different times in different companies that you owned and operated because it was too complex to set up and administer going forward. So let's talk specifically about some of the things that your guys' platform does to make certain things easier than the paper way, so to speak, or the classic way of doing things.
Yeah. So first and foremost, it's automation. And when we spent about a year researching it, we looked at all the existing solutions. And so, when we're out having conversations with other, record keepers, 401k providers, I'd say a good 90% of them are operating off of, 100% of them are operating off of some legacy system. Reliance is probably the biggest, and everybody's using that for something. And so the challenge is we're going to be limited by that platform that we're sitting on top of. And we can make, some of those user interactions digital, but if the back end administrative side of things can't be automated, then we can't reach the cost savings that we needed for a small business. So just to kind of explain that in context, it takes about 8 weeks for a small to medium-sized business to set up a 401k. And the reason why is because they're working with several different service providers and navigating the complexity of that, all the contracts, the fee schedules, everything else. It can get messy. And to compare that, you can set up something on 401go in as little as 10 minutes. And it's fully automated. So the document creation, everything, it uses e-signatures. And that's the start. And throughout the ongoing administration, the user experience, rolling funds into the platform, every aspect of it is fully digital. I was shocked. This summer, I went to kind of a conference on like a fintech conference. And somebody who was like the VP at Google's, I can't remember, banking side of the business, was talking about how today it was less than 2% of transactions actually are fully automated from beginning to end, meaning that 98% of everything that's happening at a banking or financial institution level, there's somebody's got to push a button, a spreadsheet that needs to be uploaded, a document that needs to be manually filled out. Those are the things that add cost. They also add compliance issues because when we're filling out paper forms, when there's a lot of manual data entry and everything else, then there's a higher chance that there's going to be a problem. Somebody, fat fingers a keystroke or transposes some numbers, and suddenly everything's out of whack, and it's going to take 8 hours to get that fixed. With automation, with integrations with payroll systems and everything else, we can really streamline that process. And so things that take weeks and days for the industry to do are done in a matter of minutes. The only thing that's slowing things down is basically the human on the other side of the app that is making those decisions. And it's our job to help make sure they're informed decisions. And that's where, you bring up another, I think, very critical part of our vision and belief. And it's that technology can only do so much. When it comes to anything financially related, even, younger individuals that are very comfortable using tech for just about everything, they still like the peace of mind of having somebody that they can talk to, somebody that they know, is a human, can understand their situation. And a lot of saving for retirement, it's more than just the mechanics of it. It's very behavioral. And so it's important that you have kind of that human element as well, a financial advisor to coach those individuals as they navigate through retirement. And so that was probably the biggest challenge. Writing code that works with computers is pretty easy. It's documented. It's not hard to figure it out. There's one way that a thing needs to be done. But when you're working and building software that is fully automated, but also needs to work with that human element, it's a much bigger challenge because of there's just a lot more complexity that goes into it, and we want to make sure that we're getting the best of both worlds. That we're getting the advisor doing what they do best, and that's sitting down, understanding, encouraging, and working with clients, and technology doing what it does. It's a bigger challenge than I initially anticipated.
there's a lot to it. Like you said, the technology piece, for me as a user on the investment advisor side or as a participant, right? Because we've all been participants over the years, or most of us have. You're looking for an experience that's easy, but the behavioral side that you mentioned is crucial. There's groups out there that'll tell you that we'll help you put together a portfolio and all that kind of thing, and you don't need an advisor to do that. And for some people, maybe that's true if they'll do enough research. But where individual investors in their 401k and elsewhere, where they get in trouble is they get emotional about certain things, right? The market's gone down pretty significantly over the last couple of weeks. And what happens is an individual investor that doesn't have advice from somebody who's viewing it logically or mathematically rather than emotionally watching the balance of their own 401k going down, they tend to make an emotional decision, get scared, and pull out of the market. And then they wait until the market has rebounded significantly to go back in. Mm-hmm. So they lose that upside, potential. Vanguard, one of the quote unquote do-it-yourselfers, they have advisors on staff as well, but they're one of the do-it-yourself groups out there. They put out a study every year, and it shows over and over and over again that the individual investor without an advisor gets a 3% lower return on an annual basis than one that works with an advisor. And it's truly that behavioral side of things that you're mentioning.
Yeah, and we see that and I think this is one thing that's exciting about what we're building is you have an idea from the very beginning of we need to build a platform. We need to make it be high tech as well as high touch. But then after 2-3 years of running it, we can actually see user data that supports those initial ideas. And what we find is that on plans on our platform that have an advisor involved, we're seeing a 12 to 15%. Depending on kind of what metrics you're looking at, higher participation rate. And so to us, that means that we're increasing the effectiveness of everybody that's saving for retirement, the effectiveness of that 401k by having that human element. So 100%, it's critical. And, it's peace of mind, coaching, stay the course. These are all reasons that an advisor needs to be involved. If you free the advisor up from kind of the administrative minutia, well, guess what? They have more time to be working with participants and helping them prepare for retirement.
Yeah. From my side, I think that's the key, right? If I have to spend less time handling the administrative side of things because I'm filling out actual paperwork, or paperwork's being filled out, but then I'm having to email it or get it to my assistant who then sends it to, it takes more time versus I can do an education meeting with the participants and talk about whatever, some of the things that you just talked about, the importance of participating, putting more in, starting early, not being emotional about your investment decisions, not watching it every single day, but realizing that this is money that you shouldn't even be touching until you're at least 59 and a half. And so this is a long-term investment. It's just the biggest key is really start early.
Yes.
That's huge. I remember when I first got into this business, I would carry a little card around with me, and it would show two different scenarios. One that was fully funding an IRA at the time. So when I started, the max you could put into an IRA was $2,000 a year. Mm-hmm. Right now it's $6,000, or $6,500. So, I would show one person that would do $2,000 a year from the time that they were 18 to 30. And then they stopped. They got married, started having kids, whatever, couldn't afford to do it any longer. Versus somebody that waited until they were 30, put the same $2,000 a year in, but they funded it for 35 years, from age 30 to 65 when they retired. Mm-hmm. And the one that went from 18 to 30 for 12 years and stopped had more money at retirement.
Yeah. It's that compounding interest. And I think that's the exciting thing. One of the first companies that we put on the platform is a warehouse business, and we had warehouse workers that were making $12 to $15 an hour, and multiple several of them have stopped by afterward just to say hi and check in, and a couple of them inquired about their 401k, and when they see that it grew from $300, which doesn't seem like a lot, to $500, suddenly they're like, I didn't have to do anything, and I'm now $200 richer. like that, it was a light bulb moment. And some of these I still see from time to time. And it's been interesting to see that they've really taken beyond just the 401k and interest into finance. They're investing, they're trying to learn about markets. They know the difference between active and passive and ETF versus traditional mutual funds. And this is all because of just that little simple, very, real lesson that came from seeing compounding interest at a personal level. So I think that's the power of what we have. And that's why our vision is far broader than just 401k, because it's not enough to get somebody saving, but how do we continue that, especially with employee turnover as high as it is. It balances voluntary turnover between 25 to 30% on an annual basis. So, if someone's going to stick around for 3, maybe 4 years and then change employers, there's a really good chance that their new employer won't have a 401k. So this is an opportunity for us to help that individual keep saving for retirement, because that's the goal. Like even if it's $20, just staying in the habit of doing it on a regular, consistent basis is going to make a world of difference.
Yeah, I mean, I think you really just spoke to one of the misconceptions about 401k plans in, the public in general, is that they believe that it's just for the highly compensated or the wealthy, but it truly is a program that's meant for everybody, every employee to participate in.
Yeah, and it's interesting this is something that kind of I discovered, I'd say the last year, just going through and kind of analyzing usage data and everything else. And I remember looking at some demographics. It's the lower quartile of age and wage. So these are, the lower 25% when it comes to compensation as well as age. And our participation wasn't quite where I wanted it to be. But then I started looking at the industry average and found the industry average is like 20%. And we're doing significantly better than that. And a lot of people say, well, it's because they're choosing not to save for retirement. That may be a part of it, but I also think that it's a failure on the industry's part that they're not making it more attractive to these individuals. They're not making it easier. They're not communicating it in the way that they're going to receive that message. And so for us, one of those kind of internal brand promises we talk about is not your father's 401k. And I think about even just the sheer definition of retirement to somebody like my father or my mother is very different than the way I view it. And I talk to, young, new professionals who have an even, far differing opinion on what retirement is. And in fact, we internally don't even use the term retirement. We talk about financial independence, because for some people, there's all these different movements and these ideas. I want to retire when I'm 40. There's others that say, look, I love what I do. I'm never going to retire. Neither of those scenarios fit the government's definition of retirement, and all the products that are designed to support that government definition of retirement is what we have access to now. And so we have to rethink just the sheer concept of what retirement means to our users. And then also, how do we use these existing financial products like 401ks, HSAs, IRAs to help them get to that point, so that if their definition of retirement is at 40, and I'm going to modify my lifestyle heavily right now to be able to live, at 40 on basically get my money working for me instead of me working for my money. We want to be a platform that supports that and enables that.
Yeah, no, I think that's crucial. The reality is it is looked at very differently by the millennial generation versus my generation versus my parents' generation. Everybody does look at it differently. And I find it interesting that you guys use financial independence, because we use that with our own clients as well for the same reason. It's everybody. Some of our business owners is where we spend most of our time, obviously. And many of them are like, I don't plan on retiring. All my friends are here at work. Why would I retire? Right? Like, I may want to travel more and work less, but I'm not going to just stop working and play golf every day, because a lot of people view retirement, but it truly is about being financially independent and working because you choose to, not working because you have to.
Yep. 100%.
Yeah. So let's take a quick break. We'll hear a quick call to action, and then we'll come back and we'll talk about the exciting world of regulatory changes that you believe are coming, And then I want to talk more about, your past successes and failures, because I think that's where we learn the most as entrepreneurs.
Sounds great.
Hey there, Tycoons. Austin Peterson here, co-host of Tycoons of Small Biz. If you think you have what it takes to be considered a tycoon and you're wondering how you could become a featured guest, please follow and then message us at Tycoons of Small Biz on LinkedIn. We'd love to have a conversation with you to see if it is a mutually good fit, and if so, we'll get you scheduled for an interview. If you're unsure about being a guest on our podcast, but are contemplating selling your business over the next few years and you'd like to know what your business is worth, please also follow us and then message us on LinkedIn for your no-obligation, informal valuation of your business. We look forward to hearing from you, and thanks for listening to the Tycoons of Small Biz podcast. And now, back to today's program.
All right, Tycoons, welcome back. We are here with one of the great tycoons of small biz out there, Dan Beck, founder and CEO of 401 Go. We've been talking about all things 401k. We've hit on a couple of other things, about his background as well that we're going to follow up on here in just a second. But specifically, your target market with this is smaller businesses. It's not that you don't have a platform that can handle larger businesses. You mentioned some earlier that are on there that have 500 or more employees. But your target market is that small business. They're the ones who are typically not putting a 401k in place. And so what do you see coming down the pike from a regulatory standpoint? I mean, we've got all kinds of stuff that's in legislation right now going forward that can potentially impact small businesses in a negative or a positive way. So, what are you seeing that you believe is coming on the regulatory front?
Yeah, so there's a lot of research that shows with a workplace retirement program, so most likely a 401k, if it's designed right, those employees are 15 times more likely to save for retirement through that program than on their own. That's huge. And, the government, we all know Social Security has, some inherent flaws, shall we say. And the likelihood of me or my kids being able to utilize that to the extent that maybe we were promised or it was intended, it's just not there. It likely won't happen. And so because of that, if the government can get more people prepared on their own to kind of take a little bit more ownership in their financial independence, then that's a benefit for everybody. And so what we're seeing is, California has some really good studies on this as well, is that somebody that enters retirement without significant, that's not ready for it, ends up being, there's some significant costs associated with that individual that are being borne by the local government and those taxpayers. And so it's that concept of an ounce of prevention is worth a pound of cure. The governments are seeing that. And so right now there are 14 states that are in some stage of enacting legislation mandating that employers as small as 5 employees will be required to offer something. To give you some perspective on how quickly that's been changing, I want to say it was about 2 years ago, it was maybe only 7, and so 7 to 10. So it's been increasing quite rapidly. There's been discussions at the federal level of making this a federal mandate. So let's talk about California. What they have there is Cal Savers, and these are all essentially kind of within the industry they call them secure choice programs. And in California they have Cal Savers, which as of June last year, if you had more than 50 employees, you would be required to offer some sort of a retirement program or opt into the state solution, which any business owner that I know is going to do everything that they can to avoid any state solution, anything associated with their business. And this year in June, that goes down to 5 employees or more in California. So even if you have a business in the Phoenix area and you've got 5 employees in California, guess what? You now need to offer something to at least those employees. But the way that 401ks work, you would have to offer it to everybody in the organization. So what we're seeing is there's a lot of regulatory shift in the way that retirement program, very similar to what we saw with the Affordable Care Act, where the idea is, hey, small businesses aren't offering these benefits you find in larger organizations. How do we get them to do that? And so Cal Savers is kind of their solution. And it's really nothing more than an auto-enrolled IRA. And it's a Roth IRA. And the idea is that basically all your employees are automatically enrolled in it. The employer has to submit payroll records and send money into the into the state's program, and these employees, by doing nothing, will be saving for retirement. I think it's good. Me personally, I'm not a fan. Like I'm a big free market person, and I think that there's free market ways of kind of accomplishing the same thing. And to California's credit, and I think even Oregon did the same thing, they tried going that route first. They said, okay, let's set up a marketplace for these small businesses to go find these solutions. The problem is the industry couldn't respond to that proposition. They're like, well, we don't really care about those businesses, unfortunately. We don't have a solution. There's nothing we can sell you. And so California had to step in and do something, and that's Cal Savers. So it's difficult because of like personal views and everything else. But there are benefits to these programs, and they are having a positive effect. And for us, we're benefiting from it because it's generating greater awareness in these states as well as states that are outside of it, because the NFIB and a lot of these other small business organizations are talking about these more. And so more people are going, okay, when's my state going to be next? And how can I make sure I'm prepared for this?
Yeah, there's no doubt about it. I mean, you hit the nail on the head. The reality is these states and the federal government are seeing the negative consequences of people not saving for their own retirement, right? Because 401ks came about when 401ks came about, most employees at the time had a pension, right? That was being provided to them, and so they were either contributing to it or not. It was being contributed to, for them by the employer. The costs were tremendous, and there were all kinds of problems with them being underfunded, and just lots of different problems. And so they've shifted to this personal responsibility. There wasn't a great rollout for both the employees and the business owners to understand really what that meant and what the personal responsibility is on that side to go ahead and fund that on your own, right? Because the Social Security system is just like a pension. But the reality is it wasn't meant to fund anybody's retirement. It was set up to be what they call longevity insurance for people who lived too long, to be able to help them to have money at that point because they lived longer than they were expected to. Well, back then that was 65 years old. Today it's 88 years old, 78 years old. It's a completely different story. And so they've got some stuff that they've got to solve on the Social Security front, and trying to get something solved through the federal government is never easy. But the reality is they're going to have to solve it. Now, does that mean they're going to take away the benefit completely? I don't believe that they will, right? But I do believe that the age that you expect to take Social Security is going to continue to get pushed further and further back, right? Like that end zone keeps getting pushed further and further back. And so if we're not planning for our own retirement, we're going to find ourselves potentially in a world of hurt. And, I see it in my own personal circumstances with my parents, right? They didn't have the ability to save. They didn't have a 401k plan. They were entrepreneurs. They didn't understand all these sorts of things. They thought Social Security was going to be enough. And unfortunately, my dad's body broke down and they were forced to retire earlier than expected, which meant taking Social Security early, which meant it was a lower benefit, which meant, there was just so many other things that went into that. And so here they are in retirement and really just kind of getting by barely, because they didn't understand what their personal responsibility was to go out and save on their own.
And that's, you hit on a very key point. And, I'm a huge advocate of small businesses, and we talk to small businesses all the time. And I grew up with friends that had, like a little plumbing family business and everything else. And a lot of times these small business owners, they're pouring everything and then some into their business. And they oftentimes, and I think they're taking care of their employees, they're, taking care of their team, and they're doing, there's a huge, tremendous benefit to society for the work that they're doing. But oftentimes they struggle financially, and they're not thinking about, they're thinking about making payroll next week. They're not thinking about how much can I set aside in my retirement plan. And so I'd say that as from kind of looking at, and again, this is Dan's research, so don't quote it, but in talking to a lot of these small business entrepreneurs, they're probably less prepared than many others that are making comparable incomes. And it's because they view their business as, that's their retirement. And some of the time that's possible, other times it's not. Like you mentioned in your call to action, if you're thinking about selling your business, there's a lot that goes into that. And a lot of employers don't realize, or small business owners don't realize, that maybe the way they've been doing their tax accounting and some of these other things are going to impact the valuation that they have when they go to sell that business. And something that they thought maybe they could sell for a couple $1 million, they end up selling for a couple $100,000 because they weren't adequately prepared for that. So I'm a big believer in, I think it's important for those small business owners, even if they have a business and they think that it's going to be a cash cow, and they have an idea of a transition plan and everything else, 401k is a great, or just any sort of a retirement plan. It's a good backup plan. And I view Social Security the same way. I'm going to do everything I can to prepare. And if there's Social Security, great. That's going to be like, it's going to be like my golfing money or whatever. It's just something I'm going to have fun with. But I know I've got to take care of this on my own. I think that's why even a lot of entrepreneurs that are entrepreneurs are driven from that sense of independence. And so it's important that they build that into their financial lives as well.
Yeah, there's no doubt about it. And, it's when we talk to our business owners, right, because you hit the nail on the head. They're pouring everything into their business. They view that as their retirement plan, right? And sometimes they don't fully understand it. And so we talk to them about the importance of taking some chips off the table. Let's transfer some of your net worth from your business balance sheet to your personal balance sheet. Right. And so that can be done through a 401k. It can be done through other means as well. But this is built for us. We need to get the education out there. And part of the problem you mentioned earlier is these larger organizations that are out there, that are these record keepers and set up these plans. They're not looking for the startup plan. Right? They want to be picking up plans that have $10 million or more in them, not setting up a brand new plan that this year is going to put $20,000 total into it, and next year it's going to have $50,000, and that's not their bread and butter. And so it's your technology that allows an advisor and a record keeper and an investment company to do that profitably and provide a really important service to these employees that really need it, and business owners.
And to clarify too, the industry as a whole, the professionals that I talk to and engage with, even in these large organizations, they're passionate about what they do. And it's not that they don't want to help these small businesses, it's that they can't. It's that they don't have the levels of automation. The unit economics don't support these small businesses. And I know it's something that they struggle with, and it's something they are thinking about more. We find at a lot of these national conferences, there's a lot more discussion around, hey, how do we help these smaller businesses? Because there's also, a lot of what we find, a lot of minorities are working for smaller businesses. And so they're automatically at a disadvantage if those small businesses don't have the uptake rates for 401ks that a larger corporation does. And so there's a lot of consequences that extend beyond just, an owner being able to sock away some money for his own retirement. It's a very critical part of the social fabric, but that's impaired. But then we have to make sure everybody has access to it.
Yeah, definitely a good catch. I shouldn't have said that they didn't want to.
Well, I think I said that first. The marketplace, like, we don't want those small plans, but I want to make sure that people understand it's not because there's some big evil bankers. I'm sure there are some there, but it's for the most part, the unit economics simply don't support it.
All right, so let's talk a little bit more about past successes and failures, and I'll give you the choice as to what you want to start with. But I think that a lot of our listeners, our audience is made up of small business owners, and so they learn quite a bit from hearing about your experiences, both negative and positive. So maybe choose one failure and one success that you could share with us or in our audience that they would benefit from.
I think a lot of the businesses I've been involved in oftentimes revolve around an idea that's oftentimes very separate from like what it is I love to do. And by that, my first business was in productions and marketing. I was largely freelance, and I would take contracts to produce TV shows or do marketing, a number of different things. And I really enjoyed it. But at the same time, I burned out on the creative side of things. And that was really, the thing I was passionate most about was the creative aspects. And it was that just because I was working for clients, I'm giving up a significant portion of kind of that creative license to do things the way that Dan wants to do things. It's not always better. In fact, I'd argue many times most of the time it's not. It's just the way that I want to do things, and there's many ways to do things. And I think I came to a realization that the only way I can scale this is to bill more hours, but there's only so many hours in a day. And so I hire a team, but at the end of the day, I'm always trading time for money. And if it's not my time, it's someone else's time, and it's not easily scalable. I enjoyed it, but I think the thing that ultimately caused me to kind of walk away from that endeavor in life was really in 2008, when we had kind of the financial crisis, and it affected builders significantly. And at the time, I was producing a TV show where the clients were, most of them that paid for the show were builders and building related, products and large suppliers and distribution sponsors. And so when, I walked away from that, not only had I, been going without 6 months of income trying to make that show work for the client, but on top of that, I'd incurred some credit card debt. And so I was in a really, really bad spot. And, I think that was the straw that broke the camel's back, to where the only way I made it through was by selling off all of my equipment. We had 2 vehicles at the time. We sold the one that would fetch the most and kept this, little kind of inexpensive car. And, we were living off of savings and, food that we had set aside, and a number of other things. And again, it's just, I think more than anything, it's a testament to my wife and the fact that she persevered through that. She didn't question me for 1 minute, but it was a really challenging time for me because as a father, an entrepreneur and everything else, in many ways, I felt like a failure because my job was to support them. And here we are on the verge of bankruptcy. And I felt like at that point, too much of it was outside of my control. I'm sure there are things that I could have done differently to make sure that I wasn't in that situation. But at the same time, I wouldn't trade that experience for anything because I feel it was a very pivotal moment for me and the way I approached risk and the way I thought about business and economics personally going forward was based off of that experience. It was extremely challenging for a couple of years. I was working days, nights, weekends. I remember, I was that one, year in particular, I think I was gone. I want to say it was like 40 weekends out of that entire year. So I barely saw my family for a good 2 years as I kind of had to pivot. And at that point, I moved more into the product space because I thought, hey, and for me, the light bulb moment was, when I was doing the video production things, I always had a couple side hustles. And one of those was selling these mouse pads that I designed on eBay. What I did as a creative, I knew it was important to know all the keyboard shortcuts to the different programs that I used. So I put that on a mouse pad and sold those. And I also would do I thought exploded view diagrams. So like engineering documents are really cool. Just, I'm kind of a nerd that way. So I put those on there and I did some firearms. And, some customers came back and said, hey, this is really cool, but it's not big enough for me to clean my gun on. And that was kind of the birth of, my first, real product business was a company called TechMat. And it was essentially a large, mouse pad, if you will, that showed you how to disassemble and reassemble your firearms so you could be safe and it was done properly and it wasn't a big chore. And to be honest, at the time, I didn't even own a single gun. So it wasn't like I had, it was a deep passion for me. It is something that, I do enjoy that industry. I think there's a lot of really great people in the industry, the firearms and the shooting sports industry. So I really enjoyed my time there, but that was kind of my first product business. I sold that a couple of years ago, had a decent exit. That I would say is probably the biggest success. And I learned a lot from that. That led me to launch several other brands where, this TechMat was largely wholesale. So 90% of my revenue was selling to big box retailers, Cabela's, Bass Pro, those types of outfits. and a small amount was being sold direct retail. And I like this idea of direct commerce because I saw that as a very effective way of delivering value at a much lower cost. And so I launched a couple direct to consumer brands where, we kind of cut out all the middlemen in an effort to build a better product at a better price. So those were, and the way that I approached business, I think from that experience in 2008 was I would always try to analyze. And the reason I like products is even if I made I designed a product poorly, or I estimated the market wrong and ended up with a product that was kind of a dud. I still had something. And, I knew that, hey, I bought it for this price. I could probably liquidate it for that price, or maybe, 70 cents on the dollar. So there's a way of mitigating the downside. And the way that I approach future businesses was, how do I mitigate my exposure to risk while maximizing the possible return? So the biggest idea that I can approach while still making sure that if it goes south, I'm not going to be exposed to as much risk or as much fallout as what the opportunity itself poses. And products are a great way to do that, just because you don't have to take a big risk. So I'd say those are the biggest experiences that I learned. The food truck, it was a failure just because it was a crazy idea. We hired somebody that was a really good friend, be very passionate about food, always wanted to do a food truck, but had no business experience. And my brother and I were way too busy to get involved in it. And so, I kind of learned some lessons there about management and hiring and everything else. But apart from that, a lot of the failures I've had have not been kind of at the large, business operational level. It's been product failures. It's been, marketing failures and other things that have maybe made it so I didn't have quite the financial gain that I would have had I not made those mistakes.
Yeah, I think we all make mistakes along the way, and sometimes they end up being big mistakes, and sometimes they end up being little mistakes that we can recover from. But probably the most important thing that you said there that at least resonated with me, I don't know that everybody else would hear it the same way that I did, but having a supportive somebody, right? So spouse, significant other, whoever it is in your life that is supportive as an entrepreneur, especially if you're taking some big risks and, making some big bets on certain things, is crucial. She's going to deal with the consequences, whether or not she wants to, and she's got to be okay with that. And, I can speak to the same thing on my side of things. I've been doing what I do here on the financial planning side for, 22 years now, but I've almost always had some sort of a side business in addition to the financial planning business. And one of them was real estate related in 2000. Well, two of them really were real estate related in 2008. When that market crashed, it was significant, and it was major losses and put us in a pretty tough spot. Obviously I still had some revenue from what I do here in my main business, but we were in a pretty tough spot. And, I wouldn't say that, and your wife probably wasn't this way either. She probably thought it. She maybe never vocalized it to you. And my wife was kind of the same way. You could see it in her face. She was frustrated. It put us all, in a tough spot, but it didn't change the way she felt about me and her belief in me going forward.
Yeah. And I think more than anything, it's not necessarily it's the questions or it's the belief. Like, when a lot of the time you're facing these big challenges, you've got an idea and you're trying to sell it to somebody and you're getting rejected over and over and over again. When you can come home at night and there's somebody that believes in you no matter what, like that's invaluable. It really is. And, you got to find who that is. If it's, a really good friend, a business partner, your spouse, that like, I know that a very significant, a lot of the reason I've been able to get to where I have is because of her and because of that belief in me. That when she had every reason to doubt me, she didn't. And I think that is, probably I'd say one of my keys to success.
Yeah. Yeah. Well, I can definitely echo that in my own life as well. I just, I had some pretty important mentors in my life that knew both me and my wife before we got married. And it, luckily for me, they told her the same thing or a similar thing. They said, he's one of my favorite people. You're going to be very, grateful to be married to him. What they told me was, man, you really married up like several stages. So don't screw this up,
Yeah. Feel the same.
Yeah. Sounds like the same on your side. So, all right, well, we're coming to the end here. So I want to give you an opportunity just at the end, for a business owner that's listening that needs to set up a 401k or an investment advisor that, is looking for a better solution. How do they track you down?
Easiest way is find me on LinkedIn, Daniel Beck. I think if you just search for Daniel Beck 401go, you'll find me. So that's one way to connect with me. But then also my email address is dan@401go.com. And I think one of the best parts of my day is talking to small business owners. I see a ton of compassion as they set up these 401k plans. They treat their team like family, and I'm lucky to be a part of that. So please reach out. And for financial advisors, we can't do it. We've got to have that human element, and there's no technology that's going to be able to deliver that or replace it. So please, reach out. Let's find a way to make this work. You can also go to 401go.com, learn more about what we do, and find ways to contact us there.
Awesome. Well, I really appreciated the conversation. We appreciated having you come on the show and talk about, a really important topic in our society. So I'm glad that we were able to have this conversation, have you on the show today.
Thank you. It was awesome to be here. And I think you're the perfect person to discuss these things with. Most people don't know 401ks nearly as well as you do.
I appreciate that. Thanks again for being here.
You've been listening to Tycoons of Small Biz, proudly hosted by Austin Peterson and Landon Mance. Austin and Landon are comprehensive financial planning professionals specializing in financial, estate, and succession planning for small business owners. Austin and Landon have offices in Scottsdale, Arizona, and Las Vegas, Nevada, and represent clients in 14 states throughout the country. Join Austin, Landon, and the featured Tycoons live every Tuesday at 1 p.m. right here on Business RadioX and your favorite